Okay, very good morning. Friday the 11th of August. So, hope you had a good evening. Hope you slept soundly, because it seems like we've just had a new escalation of events from last night by none other than the Donald and Kim Jong-un. So just 2 days after Rex Tillerson, the US Secretary of State, said, "Sleep sound, Americans," it seems that Donald Trump didn't get the memo, because let me just read. I think I've got to read these comments out in its entirety for you to get the full flavour from Trump, because you have to hear it to believe it, really. And obviously, putting it in context first is, you remember, beginning of the week we had the now infamous phrase of fire and fury like they've never seen before. This was the comment that kind of has sparked, in what otherwise has been a very quiet calendar week, a general risk-off sentiment. Obviously, we've seen a pretty decent rise in gold. We're now within about $8 of hitting $1,300 again on the upside. Equities have weakened. We'll talk about now we've had this ultra-low level of volatility as kind of defined by the VIX. That's seen a huge spike last night. And all of this coming on the back of, as I say, a quiet calendar which has drawn attention to this, what seemingly is an escalation in rhetoric from both sides in the Korean Peninsula. But let me just run through then the comments that he said, because what happened was, after Fire and Fury, what we heard was that he was essentially condemned by pretty much every other senior person of any importance within Capitol Hill, within the military in the US. And you kind of got the sense that it was a bit of an emotive response from Trump, and actually, more sense would return once he had spoken to his advisors and so on and so forth. So that takes us to the present day and what we had last night. And so what he said was, so in reference to North Korea, they should be very nervous, because things will happen to them like they've never thought possible, okay? He's been pushing the world for a long time in reference to Kim Jong-un. Trump, standing by his phrase, fire and fury, saying that the statement maybe wasn't tough enough. He declined to rule out a preemptive strike on Pyongyang, and we'll see what happens. So they were the comments from Donald Trump last night. Now, one of the first things that actually I thought from a execution point of view was, what time was this? Because it strikes me, looking at the chart, this was a pretty similar time to when he made the Fire and Fury statement. My immediate thinking, looking at it from a trading perspective, is there a little bit of a pattern emerging, timing of when Trump seems to be making these comments? It was kind of my thinking of when he first became president, and we were kind of watching his tweets. Every single one at that point, when he first came in, seemed to be market moving. So it was critical to identify the timings. They're not too close, but certainly late in the Wall Street session is when both events have occurred this week. The Fire and Fury came at 8:23 p.m. London time, and this latest kind of "they should be nervous" statement, let's call it, that came at around 7:37. So I definitely think you need to be, any of you guys I know in the trading live room, plenty of you stick around to trade the US session. Certainly it seems that from 7:30 to really 9, you definitely need to be just aware of Mr. Trump seemingly just hitting the Twitter sphere again. And has caused probably the bigger move in the market. Ultimately, is when Europe's already left. So kind of an opportunity late in the session. But what did this mean then last night? Well, I've got a couple of charts here to show you. And this is, on the top line, we're looking at the one-day change in regards to the S&P. Now, you'll remember Deutsche Bank talking about it throughout the week. We finally broke the 15-day run of sub 0.3% closes in either direction for the S&P 500. We closed down 1.45%. Now, 1.45% for any of you who traded through the financial crisis isn't a particularly big deal as a historical statistic, but in the context of the current low movement and volatility environment, it's actually, if you look at the chart here, this is the S&P in the top half. It's the biggest one-day change we've had since when? Got to go back to really, I think this is the 17th of May. Mapping this on the infographic or the graph on the bottom, this is the VIX one-day change. And you can see here we had a 44% pop in the VIX yesterday. And that took us to, I think it was 16.04 at the close. Remember, we were kind of tracking at around 10 for an extended period of time. Again, this was going back to the 17th of May. Can anyone in the chat tell me what happened on the 17th of May? I've got a box of brownies on my desk here with someone's name on it, if they can tell me what the news was on the 17th of May that caused the VIX to spike similar to what happened last night, and also the S&P to fall. Okay, I've got an empty chat room with 0 guesses at the moment. I'm going to give you 10 seconds. Okay, that's probably the best guess you can have, is just type in Trump, and it's got to be something Trump related. The firing of National Security Advisor Michael Flynn. And this was all to do with, remember, Trump asking FBI Director James Comey to drop the Flynn investigation. He said he was giving some backdoor comments about, can you drop the FBI's look into my practice with Russia. It then came to light that there were some misdealings with his advisor and conversations with the Russian government, and the firing of the National Security Advisor prompted this first round of cries for impeachment of Donald Trump. That was the really big deal at that point. And so that was the last time we had the same sort of level of negativity in the market, to give you a rough guide. A few other things here to just put this move that we had last night into a bit of context again, is in terms of a one-day percentage increase for the VIX. As I said, this was about 45%, 44%. This is actually the 8th largest percentage move that we've had in the VIX since 1990 in terms of a one-way move. The biggest, obviously, going back to really 07 and then the 90s. There's a couple littered in here, and actually the Flynn one we've just discussed was 7th on the ranking, just above the one we had last night. What does the VIX actually look like? Well, VIX at a 9-month high now. So Vas and I were talking about this yesterday. I'm sure 50 Cent, the infamous kind of VIX position that he's got in the market, will be feeling a little bit more comfortable than probably he was just a couple of days ago, or certainly prior to this week. Maybe he's paying in some secret money to Trump to make some comments to spice the market up. Who knows? So certainly this situation definitely warrants monitoring once again throughout the day. We'll talk about the data, because we do have the most important data release coming out later on this afternoon in the form of US CPI. But certainly, again, what is the response from Trump's kind of political group, the Republicans? What have they got to say about this? He's basically, people like John McCain, people like Tillerson, he's basically said the complete opposite of what they've trying to contain this situation, and what their line of messaging has been this week. The president has just basically thrown that back in their face. And also, it also disrupts the relationship with China. If you remember, 2 days ago, the Chinese Foreign Ministry issued a statement saying, can everyone please just stop talking so aggressively, let's come to the table, let's find a solution. This is obviously not what China was hoping for. In reference to China, there is a news publication called the Global Times. It's the English version of the People's Daily. Now, the People's Daily is important in China because it's the state-run news agency. So it's kind of the mouthpiece, if you like, of what the government's stance is. And they've written overnight that China should make clear two things. One, it will stay neutral. This is China. It will stay neutral if the US retaliates after North Korea launches missile that threatens American soil. So in that situation, if North Korea fire first, then China will remain neutral to retaliation by the US forces. Secondly, though, if the US tries to overthrow the North Korean regime, China will prevent them from doing so. I.e., if you start thinking as what Trump is saying, contemplating a preemptive strike, China have said, if you do that, we will stop you. So that's when you start going down the war route, which would be absolutely catastrophic for, well, not just the global economy, for everything, because we're talking about full-scale war at that point, which is why the probability, likelihood of this actually getting to that point, you would have to think, is incredibly small. However, if you remember, we thought people voting to leave the EU was incredibly small. We thought Trump winning the election was pretty small. And so I don't want to be the guy again who sits there with the logical argument going, we're not going to go to war, only to be turned around, and then proved different. I think what the last certainly 12 months has proven is to almost expect the unexpected. But a game of blinksmanship over a political election is one thing. A game of blinksmanship over nuclear war, this is a whole new ball game we're talking. So you would think that in the end a compromise will be made, a diplomatic solution will be found, but certainly until we get to that point, then you need to be aware that these markets are sensitive to these types of developments. And so you've got to be aware of Trump. Obviously, he's asleep right now, but come 11:30 our time is when he tends to get up. He's got a bit of a pattern of tweeting around those times, and his recent pattern of this more aggressive rhetoric has come later in the evening. You layer in as well the fact that you've had this ultra low level of movement in the market, of volatility, low levels of volume and liquidity during it's the middle of summer now, summer season. So if the market decided to really take a concerted move to the downside, breaking key technical levels on the descent, then this a sell-off could take pretty big size pretty quickly in that setup. So it's, just got to be very mindful of these developments as they come out, monitoring the news carefully to capture those opportunities if they were to occur. Okay, going back to the charts, let's move on from there and have a look at a few other things. Firstly, let's just have a look at the S&P in the context of where we could go from here, because now we've made, well, really I've got to go to a daily continuation to start looking at the last times. Let's put it on a daily here. So looks like I'm showing my charts at the moment. So you can see this candlestick here that we had. That was yesterday's move, and in that 17th of May situation with Flynn that we were just talking about, it's pretty obvious when that occurred, because you can see the only equal size down day that we've had was on that day. So we've not seen this type of movement in quite a while, and obviously we had through July a real string of pushes up to record high territory, but this brings us back down to kind of that midpoint of the consolidation that we were going through for really much of the month of June. I guess below here, longer term, really the 2400 is the big level to be aware of. If you look at 2400, I'll just bring it down to that point, was pretty much the well, 1st of March high, struggled to get through there in May until we busted through it. Then it acted as support in late June before then the next push up to record high territory. And so, well, unlikely I'd say we'd get there today, but all you would need is a repeat of a similar size percentage move from yesterday and we would be back at that level. So that would be pretty huge if we were to get down on a retest down there. Likewise though, if we go on any type of recovery, then you've got that low that we printed on the 27th of July, just looking to pull back some of the move that we really saw yesterday. That 24.48 looks quite interesting as well for the purpose of that low and the highs that were seen previously. So a couple of things to just keep an eye on. This idea of buy the dip, I think, is starting to diminish slightly because the negative forces at play seem to be getting larger at this point. Looking at oil, you'll notice that oil's had really a continuation of the sell-off that occurred after we briefly breached $50 yesterday. We had the OPEC monthly oil report. Let's just have a look. That's really what a lot of people are looking at this morning. Bloomberg being one. Skepticism over OPEC cuts returns. This is because a number of the main countries, including Saudi Arabia, have actually increased production in the last month. And so what we're seeing is compliance levels from OPEC are dropping. I think the actual percentage that they ran in the OPEC report yesterday was 86%, which is roughly about 20% lower than where we were about 2 months ago. If you remember, some of the reasoning behind this is because obviously Nigeria and Libya have been very key in the fact that they've have been ramping up production to levels that haven't been seen in an extended period of time, and that's mitigated kind of the effectiveness of the cut that OPEC have had in play, which from the OPEC group specifically is only about 1.2 million, don't forget, and Libya and Nigeria at their height in the last few weeks have managed to add something like 800,000. So if you think about the cut, it's only a cut of about 400,000. Then you throw in the fact that even Saudi Arabia are starting to produce more. You can see really why this cut isn't having the required impact to keep the price as elevated as maybe their intentions were. There's another thing that's happened. Saudi Arabia, overnight, this is their oil minister, does not rule out more oil cuts, but the kingdom will not take unilateral action. So he said, does not rule out another oil production cut, but stressed the kingdom will not take any unilateral action. The prospect of continued output cuts is on the table if any further action is needed, whether to extend or change production levels. So quite interesting here, just it's very subtle in terms of the word change, but it's just the fact that these options we've always known have been the case. You can either deepen the deal in terms of the size of the cut, you can extend the gravity of it or the length of it in order to be a longer lasting impact on the market. And so these now though are starting to be spoken by arguably the most influential member of the group, and so this is a slight move, but it seems like the market at this point is kind of OPEC are running, the chamber is running out of bullets, so to speak, and people are getting all the more disbelieving of OPEC's ability to manage the price effectively. And so we've managed to just continue to push a little lower here. We obviously had the inventory data as well during the week. The gasoline number was the one that really caught a bit of focus. If I remember, it was a build of about 3.1 million. The API was a build of about 1.5. So gasoline was pretty punchy in terms of the size of build. And you can see here a level just being identified that low we printed on the 1st of August, you can see there acted as support just yesterday, and it's acted as resistance this morning. So if you're looking to play the trend of the last kind of 12 hours or so, which certainly has been about a good 80-cent move lower, then that could be quite a good entry point to reinitiate that short at 48.37, if not already in there at the moment, given the fact that you've had that pretty clear level there over the last, well, really the month of August. It's something to just contemplate. Okay, finally, a few other news items to be aware of. You've had the RBA, so you had some dovish comments out of the RBNZ yesterday. The RBA said, has been patient as unemployment holds steady. So Australia's central bank chief said market expectations of an interest rate hike some way down the track were reasonable and signalled employment was a key metric to track, saying that the bank has been prepared to be patient on monetary policy. So that's kind of their latest stance at the moment. But in terms of the overnight session, I'd say comments not having much of a sustained impact, with the overall sentiment for that region still being driven by the kind of developments on the Korean Peninsula for the time being. Okay, quick look at the calendar. In terms of this morning, there's nothing really too much to excite. It's really the afternoon that's going to be critical, and this is because we have the most important economic data point, certainly from the US, for this week, and that is because if you think about, we've heard from Bullard, we've heard from Dudley, there's been other Fed speakers this week. The thing that the Fed are focused on, what they're telling you that they're looking at to make their policy decisions, is inflation. So therefore, this piece of data coming out this afternoon takes a new level of importance in terms of its overall impact that it could have on the market, because depending on how strong or weak this is, will definitely be a strong influential factor in their decision making on the timing of tightening the balance sheet and when they're going to do the final interest rate hike, if at all. One thing is looking at the core reading. So if we go down here, the core 1.7 is expected at 1.7. Year on year is expected to see an uptick to 1.8 from 1.6. Looking here at the core reading, so stripping out some of those volatile components, on a month-on-month basis, Deutsche Bank noting this morning that their economists are expecting core CPI inflation at 0.2% to show a 0.1 improvement from the prior month, and should finally snap its streak of 4 consecutive monthly misses in the core month-on-month inflation reading. And so, again, at this point in time, the Fed are telling us that they want to start this process of balance sheet tightening in September next month, and they want to do a final interest rate hike still as part of their plan. Most likely that would be then December. If inflation then was to move lower again, which is against what median consensus is going to make it all the more difficult for the Fed to execute that plan. And so what you would be likely seeing is the market will start to reprice their ability to do so, and your typical move would be US yields will decline, so the T-note will remain bid, probably as well in the context of the geopolitics that's going on with Korea. Given the dollar would likely weaken, that could well help boost gold prices as well up to a test on that $1,300 level. Equities would probably like the fact that the Fed is stepping off the gas in terms of tightening policy, has been the typical kind of play. But that would be in the surprise of weak inflation numbers. And we'll talk about this data obviously closer towards the time when it gets released. But higher numbers, higher numbers could be interesting. If you had, let's say, very firm inflation print in the US, this means that the Fed can proceed with their plan of tightening. And if you think about it in the right here, right now moment, this comes amid some of the most uncertain relationships between US and China and potential military action in Korea. So obviously there's already quite a large amount of negative sentiment. Equities have been behaving or have weakened on the back of that. And so Fed tightening has been generally a negative for equities as well. Could this be then the dual force to see a pretty decent pullback in what has been, you know, very recently all-time highs in US equity markets? So that could be, you know, quite an interesting development if that were to occur. Looking else at the calendar, other than the CPI numbers, you've got the Baker Hughes US rig count. It could be interesting. As I said last night, that has now started to kind of plateau, if you like, after a pretty rapid rise in the amount of operational rigs coming back online. As we got close to the lower bound of $40 only a few weeks ago in crude oil prices, although we've recovered since then, seems as though the pace of those rigs coming back has started to drop off quite substantially. And so we seem to have hit a kind of the top for the moment, but US output is still to be monitored. And US output, as defined by the weekly inventory data this week, had also reflected pretty much a stalemate, hadn't really changed from the prior week. Okay, that's pretty much it. So I'd say just be a little bit realistic about the European morning. I don't think, unless anything unexpected occurs, this morning's not really going to throw out any surprises, because really the market is more concerned about two factors, and both of which are driven from North American markets. So don't really see much need for market participants to get involved right now. Not when really you want to hear from what is the response from the rest of Washington about what Trump has said last night. What is the response from the military? What have they got to say? And also, what is the outcome of the US CPI report? I think then the US afternoon is going to be much, much better in terms of opportunity, rather than getting too stuck in and involved in things this morning. That, granted, as I say, unless something unscheduled occurs. Okay guys, going to leave it at that. That's your morning briefing. So have a good day, have a good session. For the interns, if it's your final day in your trading, good luck, and we'll be catching up with you later. Any questions, just let me know in the chat room. Thank you.